So once again, it looks like the market cannot catch a break. What's going on, guys? It's Ricky with Tech Solutions here to shed a little bit or just shed some light on what's maybe causing some of this sell-in pressure. So I really hope that you learned something new. And if you do, please consider subscribing and dropping a thumbs up if you feel like we earned it. The first thing that I want to point out is the Nasdaq market is pretty much giving back everything that it gained since Friday. So that very successful green day, one of the best green days that we've had in 2025, has now been fully wiped out with the sell-off that we had from both yesterday and today. So something to take into consideration. Also, we are now 7.5% away from officially entering a recession. For those that do not know, technically a recession is considered a 20% retracement from previous all-time highs, which in this case would be the highs that we had at 541 to the current lows that we have of 473, and we are currently down 12.34%. And it looks like fear is still continuing to get injected into the market. Two things that I quickly want to share with you. Well, why could the market be selling off today on Tuesday? Well, tomorrow is the FOMC rate decision. A lot of you guys know that. I do plan to live stream it on our channel. So just another reason to subscribe if you guys haven't done so already. But with that being said, the FOMC is going to come together and decide if they're going to pause, cut, or raise interest rates. The expectation is 4.5%. We're currently at 4.5%. So the likelihood of there to be a pause is very high. I mean, it's so high that if you look at the Fed Rate Monitor tool, they're saying that it's a 100% probability that the Federal Reserve is going to pause. And remember, the stock market does not want that. The stock market wants the Federal Reserve to start cutting interest rates. The reason Bitcoin is selling off so much and all the crypto bros are crying is because, again, the Federal Reserve is not cutting interest rates as soon as they originally expected. They thought that they were going to get more rate cuts. And again, no one wants to invest in some bullshit coin when it's really expensive to borrow money, right? It's not likely. This is, in my opinion, more of like a market that you invest money in when you don't really care for those funds, right? Or when money is very cheap. These very volatile markets will never thrive during bearish conditions. And that's the one thing that you need to take into consideration. With the NASDAQ market showing signs of some selling pressure, again, I know that for the past few days, and this is one thing that I want to highlight, it's not just you. The past 3 to 4 days, the markets have been incredibly choppy. So I want to remind you that let this be a reminder of why it's important to be mindful of your position. You shouldn't be scared of opening a short position. You shouldn't be scared of going long on a position, meaning buying the dip and hoping to make money as it recovers. We all have different intentions. We all have different plans. There's many different ways on how to make money in this market. That's not the point. The point is the only people that are truly freaking out are the people that cannot tolerate this volatility because their position size is too large. Just think about it. If you had a very light position, although markets are choppy, yes, it would still be annoying. It just wouldn't be as stressful. Remember, you are choosing to put yourself in that position. So if you can't manage your position size, then get out. That simple, right? There is no true confirmation of markets are going to go up or markets are going to go down. We do not know what the Federal Reserve is going to do tomorrow and how the markets are going to react based off of Jerome Powell's tone after he begins to speak to analysts. Depending if he's hawkish or dovish will determine if the markets continue to sell off or if the markets begin to recover, because the main focus is going to be on one thing. Is there pressure or urgency for the Federal Reserve to start cutting interest rates? And based off of the last time that Jerome Powell spoke, he made it very clear that there was no expectation, no urgency in the need for the Federal Reserve to cut interest rates sooner than what is expected. And Jerome Powell, unlike a lot of other politicians, Jerome Powell's not a politician. Jerome Powell does not mess around. He doesn't like to bait people into saying something and then doing something else. He's very straightforward. He doesn't talk about his preference. He stays focused on what his job is, and that's the head of the Federal Reserve. Some people like him, some people really don't. But in my opinion, he does a really good job keeping to himself and staying in his lane. And that's one thing that, again, we could always respect. The second thing that I want you to be aware of is something that might be causing a little bit more selling pressure as well, is that we have a GTC conference, and this is in California, and this is focused on Nvidia. And this is why Nvidia has sank 4% ahead of its annual GTC meeting. And of course, because Nvidia has such a large market cap, it of course does influence overall markets. Now, this doesn't mean that you have to be super scared or that markets can't begin to recover. There's just some fear that's being instilled into the market based off of expectation. But I want to remind you, the markets always get ahead of itself. This is why they call it a leading market, a leading indicator. It factors things out in advance before they actually happen. And remember, when you factor things out in advance before they happen, you're making a prediction. You have an expectation, and those expectations are not always met. Something to take into consideration. So very excited to follow up. The one thing that I want to remind you is that if you're new to trading, if you're just getting started, during moments like this when markets are very volatile, quick changes of direction, learn the importance of staying cash. Again, you're an adult. You can choose to do whatever it is that you want. But if you're very aggressive with the positions you take now and you feel very stressed out, that is solely because of your inability to stay disciplined and hold yourself accountable to not trade with a larger size in which that you can actually tolerate. Do yourself a favor and don't put yourself in positions in which you simply cannot tolerate. I want to see you guys all do well. I don't care if you're going long. I don't care if you're going short. The only people that I want to see lose are MSTR bag holders. Other than that, I want to see you guys all do well. Watch that position size. Be mindful, be intentional, and of course, our job is not to avoid risk, but our job is simply to manage it. I hope to see you for tomorrow's FOMC live stream. If you want to tune on in, drop a thumbs up and make sure you subscribe to the channel. Like always, let's make sure that we end the year on a green note. Take care, team.